Welcome back, YouTube, to my channel, Invest in Yourself. My name is Cameron. Today we're going to cover 3 companies that I would pick up or add to my position during a stock market crash. I'm not saying that the market's going to crash anytime soon, and it's not a pullback. These are the evaluations I go through when I pick up companies in a drawdown period, especially anything we're pulling back more than 20%. I just want to share this with you, and I hope you all like it, and let me know down in the comments what you think of how I break down some of these companies, especially when it comes to potential growth, overall foundation, and dividend. So thank you so much again, and we'll roll right into it. So going over the 3 validations I have for these businesses I picked during a stock market crash. We'll go over number 1. For my base or my foundation company, this company will at least, YouTube, have a 10% return on my investment year over year and forward looking as well. So if this company didn't have at least minimum 5 years past and at least up to a year or 2 forward looking 10% growth, it's out of that running for that stabilizer growth stock or that foundation stock in the portfolio. And again, this will be your majority foundation that you will build your portfolio around. Number 2 is the next stock will be the high potential stock. This stock's going to be like your mega growth. With this stock, you could possibly see 20-30% growth in a given year. But on the other hand, since this certain stock is seeing crazy growth potential, you might get quite a bit of volatility with this company for the near-term play. But I think it's a great stock if you can get this company at a discounted price. It's a good stock to help that growth potential in your portfolio. And number 3, this last stock will be a long-term dividend stock. And there's 2 factors that went into picking this business. First, the company had to be increasing its dividend for the last 10 years or more. And second, this company at whatever cost will maintain its dividend payout even if a market crash came as well. So that's kind of my 3 overall evaluation criteria of these 3 companies. And we'll get into them right now, rolling into number 1. Stock we have first is the FB, Facebook. Can we say, YouTube, this company just keeps charging higher? This is my foundation stock in my portfolio, and I believe in the next 3 to 5 years is going to join the $1 trillion club with the other 4 big S&P 500 growth conglomerates. But again, it closed out south around 294 as of Friday and has roared 112% off the March lows. A lot of people believe this company is hindered with the regulatory concern with a lot of different things coming down from Capitol Hill, but I think traders can really catch some further upside. But I think it's on its way to the $1 trillion market club overall. 3 to 10 years, I do firmly believe this company will be one of the top 2 market capitalization companies in the world. Facebook has a market cap of $800 billion. To top that $1 trillion, YouTube, you think about it, this company needs to reach around $350 a share, which is not far off today. You know, it will be included with 4 S&P 500 companies, including Apple, Amazon, Microsoft, and Alphabet. Have a market cap of over $1 trillion. I think Apple today is a little eclipsed over $2 trillion as we speak. Facebook stock is up 48% this year, and the broader S&P 500 index is up 8%, around give or take 8% as we speak too as well. While advertising should remain Facebook's focus, the growth in e-commerce means that the site can generate greater product discovery for small and mid-sized businesses, YouTube, relative to other channels. Looking at over the long term, we can see Facebook's e-commerce opportunities should come more and more increased adoption of those digital ads by small and mid-sized businesses and transaction fees. And with guidance, the company expects ad revenue to grow year over year basis to be roughly around 10%. And I think Facebook assumes that some of the recent surge in the community engagement normalizes regions to open due to the lapse in some of these areas due to COVID. But further, as a number of companies, you know, this is some of the drawback right now, YouTube, is that you have like Starbucks, Coca-Cola, and Verizon among some of the others that announced plans to freeze spending on social media ads, especially with their ad revenue. But I think this is it's going to be such a sore spot for Facebook in the near term, but I think long term, these companies will come back due to strictly because of the growth and revenue for those companies. But due to COVID-19, Facebook balance sheet and cash flow as of June 30th, 2020, and the cash equivalents and marketable securities were around 58 billion compared to 60 billion as of March 31st, 2020. And that's directly to COVID-19 and the situation with the pandemic. Overall, YouTube, I firmly believe this will be one of the two biggest companies in the world in 3 to 10 years. And yes, surpassing some of those big tech giants of today. Again, I'm not a financial advisor, and this is only my opinion. If you're going to go invest into FB, you should go down and do your own due diligence and check into the company yourself and look into some of the 10Ks and 10Qs and other different conference calls they have for quarterly earnings. But we shall see over time. You can look at the public account. See, as today, I think I have a little over 13 shares. And anytime this stock falls below 250, I'm looking to buy it all up. And I believe, again, anytime it's under 300, it's a good buy because just the upside in the future. And if you can get it under 250, I think it's a steal. So let's roll into number two. Number two is NVDA. This is the high potential growth stock that we talked about earlier. And if you're not tracking, shares are up 115% year to date. And it's got the earnings growth with earnings expected to rise 55% this year. We're tracking YouTube. A lot of y'all are going to say shares are not cheap. I understand. But with growth companies, sometimes we have to throw valuations out the window. And I'm tracking that it's a forward P around 57. But they've never been cheap since the get-go. If you go look at their last 10 years, you can see the meteoric rise in the stock. They're a semiconductor leader in that industry, and they offer so many different core businesses that other companies like their competitors Intel and AMD don't. Amid the pandemic, the video game graphics cards have been selling well, notching double-digit gains during what is usually a period of decline for sales. And NVIDIA has increased its shares of those to 80% of the 20 million chips shipped, YouTube. NVIDIA has shipped 80% of them out of all the companies, and their closest competitor has been AMD around 19%. That just shows you how dominant they are, even in the chip game. It's crazy. In the event no logical competition coming in the programmable GPU market, NVIDIA is further likely to enjoy premium for being the only player offering a programmable interface for computing. Earnings and revenue topped expectations, with the latter growing 50% year over year. And gross margins also came ahead of estimates. But on top of all that, management said it's expected to fiscal third quarter revenue of $4.4 billion. That's that forward-looking guidance they're giving us at $4.4 billion, well ahead of any consensus of estimates at $3.97 billion. YouTube, there's no other way to say this, but NVIDIA's products are in robust demand, and data center and businesses just had its best quarter. Gaming, as we know from our prior coverage, has been robust as well. Demand for AI and cloud application is through the roof, and there's only two catalysts also what makes it promising for 5G consideration. NVIDIA isn't just a 5G road builder like some companies. Investors like to hype up, but it's going to be a driver on what I call the 5G highway, and that's going to lead some of the greatest innovations we see. That's going to be led by NVIDIA, and it's going to bring like our biggest dreams of like science to reality. Admittedly, some of these areas of its business are struggling at the sectors that caters to, for instance, like automotive, are in a tough spot due to the pandemic. But as a whole, NVIDIA's business are booming, and thus NVIDIA stock has been on fire. And this rally is deserved, even if the stock is getting stretched. As you can see in the public account, I'm trying to build NVIDIA into a long-term hold, and today I'm looking around 11 shares. Anytime I can get this company sub 450, it's a good buy. I'm not buying at these numbers today. I think we're indeed for a kind of a pullback in NVIDIA, but overall I think it's a great growth potential stock that you're going to see great returns of 20-30% year over year into the next, I would say, 3 to 5 years in this company. But that's cover that high potential growth stock. We're going to roll into number three, that dividend payout stock, into number one. Let's roll into it. Going to Starbucks with this long-term payout. It's had a difficult year for this multinational coffee roasting, caffeine boosting corporation. While the company started the year off on a strong note, YouTube, with some stores up around, sales stores around 8% for that Q1. After the pandemic hit, there were some drastic measures that Starbucks had to take. They didn't cut the dividend. That's why it's one of the most important ones for my number three long-term dividend play. but it was expecting to have one of the strongest years in the last 5 years when it came to forward looking for Starbucks. Starbucks is poised well on a solid global footprint, successful innovations, and digital offerings. The company's also strengthened its relationship with Alibaba, so it kind of opens up that emerging market for Starbucks. Starbucks, again, raised its dividend payout by 14% 8 months ago. The dividend yield peaked around 2.7 in the darkest part of the pandemic health crisis, but fell back again around 2% for the stock recovered. Many companies have paused or even canceled their dividend policies in order to conserve cash during the coronavirus pandemic. Starbucks has not made that move yet, and management has told the investors the dividend will stay intact. And I firmly believe, YouTube, that they'll make drastic changes like closing stores before they make that dividend cut, and that's why I put it in here as number 3 in that long-term dividend payout. Starbucks sent out its first dividend payment around 2010, and the payout's been growing 8-fold in the 10-year period, while share prices is multiplied by 7 times. The company's committed to annual dividend boost even in these difficult times, and Starbucks has plenty of headroom to keep growing these payouts with full backing of torrent cash flows and short-term gains. And Starbucks has everything a dividend investor may want, and the stock would look good in your income-oriented portfolio for the long term. And during the pandemic, Starbucks did fall around 40% from peak to trough. It's just a direct result of COVID-19. It has since recovered a large chunk of the losses, yet the iconic large cap growth company is still 22% off its all-time highs, or roughly around $100 a share. In its most recent quarter, the global coffee giant posted 38% revenue decline, but reported EPS of negative 0.46 versus some of the different retail estimates around 78 cents just a year ago. The pain was entirely attributed to the pandemic. Interestingly, average ticket size per customer actually rose around 25% during the period, meaning that the profit and sales decline were driven steep declines in customer traffic. COVID-19 has certainly took its toll on Starbucks, YouTube, but with this one, I still think the company is starting to see a business recovery and is effectively transforming its stores with these times. For Starbucks, there could be brighter days ahead, but the most interesting, important aspect is that the stock pick is that the company, even in hard times like a stock market crash we had in March, the company is going to conserve money even if they have to shut down stores to preserve that dividend payout. And this is why Starbucks made it on the list of mine. Thank you so much, YouTube, for sitting here coming to watching my video. I hope you enjoy the 3 stocks that I went over evaluating that I would pick up during a stock market crash. Please let me know down in the comments again what you think about the video, and we can open up a dialogue if you hold these companies or intend to do the same things that I'm doing during a crash. Again, thank you so much, and don't forget, invest in yourself.